All right, everyone. My name is Yasir Yamin, and I welcome you all in this FR session. In today's class, we'll be practicing, some questions on IFRS 16. Now, IFRS 16 is one accounting standard that most people tend to make mistakes in. IFRS 16 is a very important accounting standard as far as, reporting papers are concerned. It is one of those accounting standards that was recently published relatively as compared to others. And that is why examiner wants to make sure that he routinely examines this accounting standard. Now, before we even move on to do this accounting standard, let's just have a recap of it. We studied in our classes that lease is an arrangement in which there are two parties involved. One party is known as lessor and the other party is known as lessee. Under IFRS 16, for the purpose of FR only, we focus on lessee books primarily. On initial recognition of the leases, we prepare an accounting entry, right to use asset debit and leases and finance lease obligation credit. We do this because by default under IFRS 16, all leases are treated as finance leases unless there are, any of the two conditions are met. What were those two conditions which grant you exemption from applying this technique of RUA debit and FLO credit and following IFRS 16 onwards? The exemption is either your asset is of low value or it has a lease term of less than 12 months. Make sense? Now, primarily IFRS 16 largely talks about finance leases. This is something which should be learned. When you talk about finance leases, on initial recognition, the first accounting entry would be RUA debit and FLO credit. Once you have done that, you will be preparing for subsequent measurement. You will be preparing a lease amortization schedule. Every time you prepare a LAS, it will have 5 columns towards it. You will have date, rentals, interest payments, balance finance lease obligation, decrease in finance lease obligation and balance finance lease obligation. And thereon, you will recalculate your lease liabilities at each period of time. Make sense? Whenever there is a question for advance payments or down payments in particular, you always remember to exclude down payments from your lease liability and then carry on with the question. Sometimes it also happens then when you exclude the lease liability, you will have to recognize an interest accrual within the relevant reporting period. This is what we have discussed in our earlier sessions as well. One more thing that you should always remember regarding leases is about the measurement of RUA and FLO. As far as the finance lease liability is concerned, the lease liability is primarily measured at the present value of minimum lease payments, the present value of future lease payments. So technically speaking, the lease liability itself is the present value of all the cash flows that you have to pay in the future with regards to a lease. And that means your lease liability is already reduced by the amount of prepayments or down payments that you make. Make sense? Furthermore, IFRS 16 defined that your lease liability might include any penalties, any, guaranteed residual values, and so on and so forth. These should be included in your lease liability. As far as measurement of your right to use asset is concerned, remember your right to use asset is measured like any other asset. You will initially measure your right to use asset at your lease liability. That is, principally it is present value of future cash flows. You will add up down payment to the valuation of right to use asset as well. Remember, the value of your right to use asset is cumulative of any payment that you have made with regards to the lease. Any payment, either the payment which has been made now or the payment which has to be made in future. So one thing you always need to remember, and this is fairly important, it will help you in today's session as well. It is when you talk about your lease liability tends to represent, future cash flows, the obligation to pay future cash flows. Whatever you have already paid with regards to the lease, it does not tend to, that does not become part of your lease liability. It's already reduced. That down payment reduces your lease liability. Make sense? But when you talk about right to use asset, and I want you to pay very good attention to this fact, When you talk about right to use assets, right to use asset valuation considers every payment that you have to make with regards to the lease. This includes future cash flows, right? Plus any prepayments or what you call down payments as well. So these are included within the valuation of right to use assets. Do you understand this? Make sense? Plus, we studied that during the valuation of right to use asset, any directly attributable cost, you capitalize that as well. If there are any compulsory disposal costs that will come as a consequence of taking the asset on lease, you will capitalize those as well. Make sense? And then we also studied about sale and leaseback transactions in our IFRS 16 lectures. All right. First of all, I would like to have your go ahead if you understand whatever I have, whatever we have revised up till now. Are you guys good with it? Please give me an okay. Make sense? Can we move forward? Now, as we have revised a bit about IFRS 16, let us now do some study hub practice questions. Now, I've always said that these study hub practice questions are not those kind of questions that you can say, these are not those kind of questions that you should exactly, expect in your examination. But these are very good practice questions with regards to the concept clarity, So these will provide you very good clarity on the concepts. All right. So we'll start doing some questions, some selected questions from your study hub, ACCA study hub, and I'm very sure these will help you. What I want you to please make sure to pay very good attention. You see, at this moment in time, when you're looking at this lecture, you don't need to do anything else other than listen to me. Do not do anything else. I just want you to be very attentive and I just want you to be very communicative. You need to answer me whenever I ask you to do so. All right. And let's see, let's try on some different kind of questions, which will ultimately help us in our exam, right? So the first question that we see, examiner says, on 1st of January 20x7. Now, I always say to accountants that, dates are very important for you when you're doing an exam, right? So it's on 1st January X7, Mellon leased an asset under the following payment terms. So Mellon actually leased an asset on 1st of January X7. And mind you, if I were you in that exam, I would love to go and see what is the accounting year end. I can just go on to the requirement and see that examiner has asked me that what is the finance charge for P&L for the year ended 31st December 20x7 in accordance with IFRS 16. Now, I see that 31st December 20x7 is the accounting year end, and I took an asset on lease on 1st January X7, which should be the start of the year. So it's a full year lease. You see, why am I saying this? Often, whenever students watch lectures or follow any type of lectures or they do practice of examination, they tend to just make sure that their answer is correct. Your answer should be correct. That's fine. That's totally understood. But you see, when you come to these kind of classes and you take these type of sessions, it is very much important that you understand the process of attempting a particular question in your exam. So my focus in this session is just to develop a strategy on how to attempt a question. If I were you, I would look at the first date, look at the end date, and then I have conceptual clarity that this is a 4-year release. No prorating needs to be done. All right. Then examiner says that the lease terms were as follows. There was a deposit of 6,000. The balance after deposit, the balance on the lease after deposit was 14,200. I mean, this is the amount which is still to be paid. Make sense? So deposit would have been paid at time 0, year 0, T naught. And then there is $14,200 of amount which you still have to pay on the lease. And therefore, the total price on which we took the asset is 20,200. Make sense? So the total value of the lease would have been 20,200. The balance on the liability is 14,200. And initially you have made a payment of $6,000. If someone was to ask me, sir, what would have been the accounting entry which the accountant would have followed? Just think about it. What would be the accounting entry? Think about it. I mean, we took an asset on lease. So right to use asset debit. The asset was worth 20,200. Sir, why did you value your right to use asset on 20,200? Because I just told you, the valuation of right to use asset includes any amount that you have paid with regards to the lease. It includes the initial deposit that you make. It also includes the amount which you have to pay in future as well. So the total cumulative amount with regards to this asset might have been 20,200. Then you would have in absolute amounts, not in present value terms, not in present value terms. We are yet to go for it. So your liability in, would have been 14,200 and your cash payment would have been 6,000. All right. I would have made this accounting entry if I would not have read the question that already comes. Make sense? Are you guys with me here? All right. So this would have been the basic accounting entry up till now. All right. But let us just read forward. What does your examiner say? The examiner says that the balance is payable. The balance means this $14,200 of amount. The balance is payable in 2 annual installments commencing on 31st December 20x7. So if I were to draw a timeline, it would look like that on 1st January X7, I commenced a lease. And against this lease, in total, I have to pay 14,200 within the span of 2 years. So the first payment will be made on 31st December X7, and the other payment would be made on 31st December X8. On 31st December X7, 2 annual installments were to be paid. So on 31st December X7, the first rental that would be paid would be 7,100. Can anybody tell me how did I calculate this 7,100? How did I come to this value of 7,100? Where did this calculation come from? Very good. Excellent. So the total payments were 14,200. We had to make this payment in 2 installments. You divide 14,200 by 2. There you will get each installment. The first installment would be 7,100. The next installment would be 7,100 again. Make sense? The examiner says that the interest rate implicit in the lease contract is 12%. And at the same time, examiner tells you that the present value of $1 receivable at a discount rate of 12% is each dollar is worth in 1 year's time $0.89. Each dollar is worth in 2 years' time $0.80. Examiner has basically given you basic discount rates. Examiner has basically given you discount factors. Make sense? Now the question is, why would have examiner given you discount factors? Why would we need discount factors? Because we just revised, guys, that lease liability is not measured at absolute amounts, but is rather measured as present value of future cash flows. So we understand that 7,100 is to be paid after 1 year. 7,100 again has to be paid after 2 years from now. But we want to recognize a lease liability. We want to recognize a lease liability at this point in time, 1st January X7. So we need to calculate this period's lease liability, this point in time's lease liability. How do we do that? We calculate present value of the future cash flows. We calculate present value of the future cash flows. How will we do that? How will we do that? Please, guys, help me out. You need to have your calculators in your hand. Present value of future lease payments. Present value of future lease payments. We are going to pay in 1 year time, we are going to pay $7,100. And in 1 year's time, each dollar will be worth 0.89 only. So 7,100 into 0.89. I don't know whatever is the amount. Then there is another payment of 7,100 in year 2, and each dollar will be worth 0.80. So what will be the present value? What will be the present value? For the first year, somebody says it is 6,319. What is the present value of next year? If anybody could tell me. It's 5,680. So can you tell me the total amount in this case? 6,319 plus 5,680. It's 11,999, or maybe we can round it off to 12,000. Excellent. You understand? So guys, this is the present value of minimum lease payments, and your lease liability should be recorded not at 14,200, not at 14,200, but your lease liability should be recognized at 12,000. You guys just let me know, is this clear to you? Your lease liability has to be recorded at $12,000, not at 11,999. Oh, sorry, not at 14,200. Do you guys understand this? I want an answer from everyone. And this is basic common sense. This is the fundamental principle of IFRS 16. Make sense? All right. Now, once you know that you have a lease liability of 12,000, just go and see what your examiner requires. Examiner asks you a very simple question. What will be the finance charge on your lease liability for the first accounting year? Now, I can do this on calculator even, but if you say so, I can just draw a lease amortization schedule in front of you, if that helps. If that helps, I can draw a lease amortization schedule in front of you. Let us just make a few columns here. So the first column is for date, the other column is for rentals. The third column, what I call it, will be for interest. Then there is decrease in finance lease obligation. Then there is balance finance lease obligation. Make sense? So on 1st January X7, by calculating present value of lease liability, you would have recorded a lease liability in your books of 12,000. Our next meeting would be on 31st December X7, where you pay 7,100 as a rental. We discussed about it. But that 7,100 rental would also include some amount of finance charge. And this finance charge would be based on 12%. So if you were to calculate the amount of interest, that would be 12,000 into 12%. What would be the amount? 852. And then you will be left with some balance. Can anybody tell me the balance as well? Although it's not required, I've already solved the question up till now. What would be the balance? The balance would be 6,248. Just to confirm, is this 852 the correct amount? I feel this is not the correct amount. I feel maybe somebody has calculated 7,100 into 12%. I figured that out. No, 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 no. You do not calculate interest based on the amount that you have paid. You calculate interest based on the amount that you haven't paid. So you were to calculate lease liability on 12,000, right? So 12,000 into 12% would be 1,440. And that means your decrease in FLO would be, if anybody could tell me, 7,100 minus 1,440. This is 5,660. And then 12,000 minus this amount would be 6,340, and so on and so forth. We can solve it for the next year as well. All right, guys, done. So your examiner was asking you what was the finance charge for the first year, and our answer would be, since we need to write in full numbers, dollar amount, it would be 1,440,000. This is the answer in full amounts. Is everybody clear on this? Everybody says okay, and then I'll move forward to the next question. Is it okay? Perfect. Excellent. Let's move forward. Now, I want your support again. Your examiner says in this particular question, ACCA leases a new machine. Congratulations. Examiner says the interest rate implicit in the lease is 13% per annum. The initial amount recognized for right to use asset is 1,750,000. Now, I want your attention. Right to use asset has been measured at 1,750,000. Make sense? This is the initial amount recognized for right to use asset. Guys, I'll make a statement and I'll want your feedback with a yes or no if you think I am right towards the point or not. My right to use asset calculated as 1,750,000 would have been at least calculated according to the following formula. At least, at the very least. This would include the value of my lease liability, which is generally the present value of future cash flows, plus the down payment as well. Do you guys agree with this? The measurement of RUA includes down payment as well. Make sense? Very good. Now, examiner says the lease is for 4 years and ACCA is required to make 4 annual payments of 520,000 with the first payment due on commencement of the lease agreement. Can you guys tell me what does your examiner mean that 520,000 will be the first payment which is due on commencement of the lease agreement? What is this first commencement payment? What do you mean by this $520,000 being paid on commencement of the lease? What do you mean by that? Excellent, yeah. You guys are very smart. Very smart. Sir, this is the down payment or the prepayment. You guys are very smart, mashallah. All right. If 520,000 is the down payment, can you help me calculate the lease liability if I'm required to do so? What would be your lease liability? What would be your lease liability in such a case? Your right to use asset would have been measured at 1,750,000. Down payment would have been included within this 1,750,000. Down payment would have been included within this 1,750,000. But for the purpose of calculating lease liability, you need to exclude this down payment. 520,000 subtracted the lease liability. Somebody is telling me should be 1,230,000. I want an answer from everyone. Is this point clear? Right to use asset includes the down payment, which the examiner had already given us. If we need to calculate the lease liability, this 520,000 needs to be excluded because this is the down payment. Agreed? Examiner says that ACCA's policy is to depreciate machinery over 5 years on straight line basis. Fine enough with me. Examiner is asking us what is the correct total expense for profit or loss for the first year of the lease. Now we are asked to prepare a P&L extract for year 1. And when we are asked about P&L extract for year 1 with regards to the lease, and examiner is asking for total expense, then we need to provide for depreciation expense as well. And at the same time, we will also need to have our interest cost on the lease as well. Can anybody of you try and calculate the depreciation amount for me? Can anybody of you do that? It's not difficult. Your right to use asset is valued at 1,750,000, right? The life was 4 years. So it should be 1,750,000 divided by 4. Is that the correct amount? 1,750 divided by 4. This should be 437,500. Am I correct? Oh, sorry. It's 5 years. I made a mistake. Apologies. Apologies. 1,750,000 divided by 5. So it is 350,000. Is that what you're saying? Very good. Makes sense. What should be the interest cost? Now, I can go and prepare a lease amortization schedule, but for a question like this, I don't even need to do that. I could have done this in my examination just by using a calculator. You see, my opening lease liability I have determined is 1,230,000. And I know for sure that interest cost will be calculated on the lease liability on 13%. So just by taking 1,230 and multiplying it by 13%, I will be given an amount of 159,900. I can write the same here. So what should be my total answer? If anybody could tell me. What's the total of this? It's 509,900. Is that so? It's 509,900. All right. So your answer should be A in that case. Is this correct? Is everyone on the same page? All right. So we have done this question as well. If everybody is on the same page. Yes, yes, Mohammed. Mohammed, I'm waiting. There is something which you have in mind and I want it to come out. Okay. So Mohammed has a point. Mohammed has a point. Mohammed is saying, sir, the lease is for 4 years. You tend to say the lease is for 4 years, but the depreciation has been calculated for 5 years. Why is it so? Why is it so? Why didn't you calculate the depreciation on 4 years? Do you guys remember anything with regards to this? The use of useful life. Do you guys remember anything? There was something which, there was a rule. There was a rule. Remember? If the asset is expected to be transferred at the end of the lease term, then you always use useful life. Remember? Then you always use useful life. And the other rule was, if the asset is not expected to be transferred. How do you know if the asset is expected to be transferred or not? If the lease contains a bargain purchase option. If the lease contains a bargain purchase option. And if the asset is not expected to be transferred at the end of the lease term, you always use lower off. You always use lower off. So Shahid, in this particular case, do you think that the asset is expected to be transferred at the end of the lease term? Is the asset expected to be transferred at the end of the lease term? Do you see any bargain purchase option? The answer is no. So is it correct to calculate the depreciation based on 5 years, or should we apply the criteria of lower off? You see, lower off is two things. The lease term is 5 years. The useful life is 4 years. What should we be using? We should be using lower off. So there is a correction in our solution now. The depreciation should be calculated on 4 years, and that would provide you an answer based on 4 years, which is so 1,750,000 divided by 4. The answer should be, if anybody could do, otherwise I would have to do. The answer would be 437,500. The answer would be 437,500. And when you add 437,500 to 159.9, the answer would be 597,400. Is everybody on the same page with me? Your answer is C, not A. Is everybody on the same page, guys? All right. So the answer should be C. You see, this is how your examiner tricks you. A simple thing that if you miss in a particular question, your answer would go wrong. Now you would be thinking, now everybody thinks, sir, I went to the examination, I had the correct option. I don't know why didn't I score good? Because of such type of mistakes. Now, whatever answer you calculated would still be an option, would still be an option. And since it would be an option, you would tend to think, okay, at least my answer is one of the options, from the above, and therefore my answer should be correct. Therefore, I should be scoring good marks, but that is not always the case. All right. So very good point out by one of our mates. Now let's move on to the next question, guys. Examiner says in question number 3, guys, I want you to be attentive, okay? During the year ended 30th September X4, Hyper entered into 2 lease transactions. So Hyper entered into 2 lease transactions. One lease transaction they entered on 1st October X3. Guys, 1st October X3 means this is the start of the period. And then we entered into another lease on 1st January X4. If we entered into a lease on 1st January X4, this is just 9 months before the accounting year end. This is just 9 months before the accounting year end. Are you guys on the same page with me? All right. Now, examiner says on 1st of October 20X3, a payment of $90,000 being the first of 5 equal annual payments of a lease for an item of plant. So examiner is saying we made an initial payment on 1st October X3 of $90,000. Can anybody tell me what does this $90,000 payment at the start of the lease represent? What is this? This understanding will certainly help you. Yes, very good, guys. This is your down payment. Excellent. Examiner says the lease has an implicit rate of 10%, and the carrying amount of the right to use asset and the present value of the lease liability were both initially measured at 340,000. They were initially measured at 340,000. Now your RUA is 340. An examiner is saying that we have calculated lease liability at 340. If it is the case of down payment, is it possible that your RUA and your lease liability is measured equally? Is that possible? No, no, sir. Because lease liability should always exclude the down payment being made, but the right to use asset should include that. Make sense? So you're rightfully saying that, sir, you should subtract 90,000 of the initial payment from here to calculate the correct lease liability, and that should be 250,000. Make sense? Now, the requirement of examiner, I'll repeat once again, the down payment should be subtracted from the lease liability. Hanan, do you understand this point? The down payment should be subtracted from the lease liability. Agreed? Now, your examiner is saying what total expense should be recognized in P&L for the year ended September 20X4 in respect of the above transactions. Now, we are only looking at the first transaction for now. The first lease. If we are looking at the first lease and we are thinking what would go into the P&L, then we know with regards to right to use asset, you will be calculating depreciation, and this depreciation should be calculated as You have an asset of 340,000. You have purchased this asset with 5 equal annual installments. So the life would be 5 years. 340,000 divided by 5 years. Can anybody tell me what would be the answer of depreciation? What would be the answer of depreciation? 340 divided by 5 years. This is 68,000. Correct? And then you have a lease liability of 250,000. Now I can go on to prepare a lease amortization schedule if you want me to do. But there is no such requirement of balance sheet, na? There is no such requirement to calculate the decrease in FLO and the balance FLO and the current portion and the non-current portion. That is not required. So why can't I save my time? I can just simply multiply 250,000 with the implicit, interest rate, which is 10%, and that would give me an interest cost of 25,000. This is my interest cost. Make sense? If I were to ask you what should be the total amount with respect to the first lease, what should be the total amount with respect to the first lease? That should be recognized in P&L. Can anybody tell me 68 plus 25? That should be 93, I guess. Correct me if I'm wrong, but I think this should be 93,000. Perfect. At least we have done the first part. Done. For the second part, your examiner says on 1st January X4, which is 9 months before the accounting period end, a payment of $18,000 for an 8-month lease of an item of excavation equipment. You have paid $18,000 for 8-month lease for an excavation equipment. Is this lease of excavation equipment an operating lease or a finance lease? You guys are very smart, huh? Very smart, mashallah. So it's definitely, sir, the lease period is less than 12 months. The amount seems to be relatively small. And therefore, we can conclude that this is an operating lease. This is an operating lease. Sir, this lease is for 8 months. And therefore, whatever lease payment we have made should be amortized, should be recognized over 8 months. And do you think since that our accounting period comes after 9 months from the date of the lease, this whole 18,000 would be charged as an expense by then? This whole 18,000 should be charged as an expense by then. Do you all agree? So with regards to the finance lease, what goes into the P&L, with regards to the finance lease, what goes into the P&L is 93,000. And for an operating lease, what goes into the P&L? 18,000 for sure. So what should be the total amount that goes in P&L? If anybody could tell me. 111,000. Is that the correct answer? Let me know, is that the correct answer? In that case, B should be the answer. Correct? All good? So the question is why we subtract 90,000 from the lease. We may think like RUA plus 90,000. Do you see it's okay. So somebody is asking me a question. Sir, why don't we think like that? That we should be including this 90,000 within RUA and not subtracting from lease liability. I think it's very hard to think like that. It's very hard to think like that because it does not make sense. You see, maybe, I don't know, even if you do that, I don't know, the answer might be the same, but it's very hard to think like that. I mean, somebody can think like that, but I don't see it happening. Because examiner has written the carrying amount of the ROU asset and the consequent lease liability were both initially measured at 340,000. That gives me the, indication, that the total value of the lease was 340,000. And then you understand what I'm trying to say. You're right. I mean, somebody can think like that. I won't say it's almost impossible to think like that. You're right. But you see, when your examiner says that I've recorded RUA and lease liability at the same time, at the same value, you would most likely tend to understand that down payments are not still accounted for. Make sense? And that is why both values are the same. Remember, we used to do the same thing in our classes as well, if you remember those type of questions. So you see, this is the only logical thing I can tell you about. Make sense? All right. Allah. On 1st January X4, what should I repeat here? On 1st January X4, this was an 8-month lease. Our accounting year ends after 9 months. Therefore, we should recognize all of this 18,000 as an expense. All right. Very good. Thank you. Let's move forward. Another question. Your examiner should say, Flotsam Company entered into a 3-year lease agreement for an item of plant on 1st of April 20x0. Now, as I always say, as an accountant, you should always take notes of date. So you took a lease on 1st April X0. Now, there is one more question. I would like to answer this question. Somebody asked me, sir, that if there is an operating lease, the expense of operating lease should go into administrative expenses. That depends. You see, if you have taken an operating lease for a computer equipment, then computers are used for administration, and therefore your expense should be charged to administrative expense. In this particular last example that we saw, it was an excavation equipment, and most likely excavation would be used for the purpose of constructing properties, right? So it's a production cost that you have built. In that case, logically speaking, that expense should go in cost of sales, right? So let's say a company says that we have taken our delivery fleet on operating lease. In that case, you should be charging that lease expense into selling expenses. So that depends. In this case, I think it should be cost of sales. All right, let's continue. So the lease, we took the asset, we took the plant on lease on 1st April X0. And mind you that the question is for the year ended 31st March X1. So this is technically start of the year. All right. Examiner says the agreement requires annual payments of 150,000 in arrears. All right. The present value of the lease payments at the inception of the lease, discounted at the rate of 8%, is 386,550. Your examiner is saying that we have calculated lease liability, which is, by the way, the present value of minimum lease payments. We have already calculated the present value at the rate of 8%, and this seems to be 386,550. Make sense? Then your examiner says, additionally, Flotsam paid directly attributable cost of 7,500 on 1st April X0. My question, should lease liability and right to use asset be measured at the same amount? Should they be measured at the same amount? Should the answer for RUA also be 386,550? Remember, there is no down payment in this case because all payments are to be made in arrears. All payments are to be made in arrears. So there is no down payment case. But should still the lease liability and RUA be on the same amount? No. In this particular case, you see there was directly attributable cost of 7,500. And as per IFRS 16's measurement criteria, you should include this 7,500 directly attributable cost. You should capitalize this within the value of your asset. And therefore, your total amount of asset would be 386,550 plus 7,500. This total comes up to be 394,050. The examiner is asking what should be the depreciation, what should be the lease interest. There is a question, sir. RUA and lease liability can never be the same. Give me answer, guys. Give me answer. The question is, sir, RUA and lease liability can never be the same. True, false? True or false? False. They can be the same. They can be the same. If you took our classes, they always used to be the same until and unless there was case of down payment. They always used to be the same. All right. So let's continue. Let's us calculate depreciation on RUA. 394050, the 3-year lease. So divided by 3 years. And then there is interest on lease. The lease liability is 386550. The interest rate implicit in the lease is 8%. Can you guys tell me the answer respectively? 394050 divided by 3 years. What should be the answer? What should be the answer? 39050. So it's 131350. And for the lease liability, it is 386550 into 8%. This is 31524. Right? Okay. This is not the answer. The answer is 30924. So what should be the correct answer? The correct answer should be C. All right, everyone. Make sense? Fine. All right. Should we move forward? Perfect. Now let's see the last two questions of our this session. Okay, so examiner says Blue Company entered into a 4-year lease agreement on 1st January 20x0. Like I always say, note the dates. You took a lease on 1st January 20x0, whereas your year end was 31st of December 20x0. So it's the start of the year. Examiner says it required payments of $19,000 to be made annually in arrears. So there is no down payment case. There is no down payment case. All right. The interest rate implicit in the lease is 10%, and the present value of the lease payments at the inception of the lease is 60230. So we have been provided with the fact that our lease liability should be 60230. Make sense? Is everybody on the same page? Examiner says, as of 31st December 20x0, only the first installment has been recognized as an expense in the financial statements. Can anybody tell me if this is the right thing to do? At 31st December 20x0, only the first installment was complete 19,000. They have recognized the entire 19,000 as an expense in the financial statements. Is this correct? Can you recognize for a 4-year lease, can you recognize the entire lease payment as an expense? No. You see, whenever there is a finance lease, two things go into your P&L. One is depreciation on RUA. The other thing is the interest component out of the lease or out of the rental payment. So your examiner is truly incorrect by charging $19,000 as an expense, right? So what should be your expense? First of all, you should be calculating interest amount on your lease liability. 60230 was your lease liability. The interest rate is 10%. So multiplied by 10%, this should be 6023. Make sense? Then you need to calculate depreciation on your asset. And in this case, it should be calculated as 60230 divided by 4 years. What should be the amount, if anybody could tell me? It should be 15058. So the correct expense which should have been noted under P&L should have been. Can you tell me what would be the total correct expense? 15058 plus 6023. What should be the correct answer? It is 21089. How much your accountant had charged in its financial statements? Your accountant had charged $19,000, right? So what is the difference? 21089 minus 19,000. Okay, so I've done a mistake. They are saying 21080. Okay. So 21080 compared to 19,000. The difference is 2080. And what had your accountant done? An accountant charged an expense of 19,000 only, whereas the true expense would have been 2080 higher. So your accountant had understated the expenses. Your accountant would have understated the expenses by 2080 or 2081, whatever you say. So examiner is asking you, what is the effect of incorrect treatment on Blue's profit for the year ended 31st December 2080? Your accountant understated the expense. And as a consequence, your profits should have been overstated. Do you all agree? Do you all agree? Make sense? So the answer should be A. Your examiner is asking you, what is the effect of incorrect treatment on Blue's profit for the year? The impact on Blue's profit for the year would have been an overstatement of profit by 2080. So is this correct? Okay, Mohammed is trying to say something. And every time Mohammed says something, there is something uh you know good coming on. Anan, I'll come back to you. Give me a second. I'll wait for Mohammed. Are you saying something or should I start answering the other person? There is a question in between. I'm stuck. Do I wait or do I move forward? Okay. So there is one more question that I need to answer, and that question is, sir, the answer is not B. Why is the answer A and not B? If anybody could tell. You see, the question is, what would be the effect of the incorrect treatment? Just assume that if we go and prepare our P&L according to what our accountant had done, right? So if we followed what our accountant did, our accountant charged the first installment as an expense in the financial statements. So only 19,000 would have been charged into our financial statements, and the effect of incorrect treatment would have been that profit for the year ended 31st December X0 would have been overstated. You see, the expense is understated. Expense is understated. Hanan, do you understand? Expense was understated by 2080. So your profits would have been overstated by 2080 now. Make sense? Agreed? And that is why the answer is A, and therefore it's not B. All right. So let's move on. Let's see the last question, guys. Examiner says, Cornet Company entered into an 8-year lease agreement on 1st July X4. Note down, you entered into a lease on 1st July X4 and your accounting year end is on 30th June X5. So technically you entered on the first date of the lease, you entered into a lease agreement. The examiner says the lease requires annual payment of $750,000 in arrears. So there is no down payment up till now. Make sense? The present value of the lease payments on 1st July X4 discounted at a rate of 6% is 4,657,500. So your examiner is saying that your lease liability has already been calculated at 4,657,500. Examiner says, additionally, Cornet Company paid directly attributable cost of 37,500. Can you guys tell me what should be the valuation of right to use asset? It should at least be equal to the lease liability since there are no down payments. Plus, you should be capitalizing this 37,500 as well. Very good. What should be your total? What should be your total? I don't think so. 695,000 is the correct answer. 4,657,500 plus 37,500. What should be the amount? Yes, 4,695,000. Now, our examiners are asking us what is the total expense that should be charged in P&L. In P&L, two things will go. In P&L, two things will go. First of all, there will be an interest cost. And how do you calculate interest? Your lease liability is 467,500. The interest rate implicit in the lease is 6%. So therefore, the interest cost should be, how much should it be? How much should it be? If anybody could tell. 4,657,500 into 6%, it should be 281,700. And what about RUA? You need to calculate depreciation on RUA. And if you were to calculate depreciation on RUA, okay, so there is a number issue. Correct option is 274050. Is that correct? Is that correct? 4, 6. You want me to do it? 4,657,500 into 6. This is okay. I think the correct option is 279450, right? And then you calculate depreciation on RUA just by dividing the carrying value on RUA by what? 8 years? Yeah. What is the depreciation, guys? 4,695,000 divided by 8. This is 586,875. Very good. What should be the total expense to be charged in our P&L? 279,450 plus 586,875. What should be the total, guys? 279,450. It should be very good. 866,325. And therefore, your answer should be C. Correct? All right. So is everybody good in this? Everybody understood all the questions? Make sense? Did it help? I want your feedback.